There's our Forex blog for February 4th, 2013. And what you see here is our new currency meter, which has basically the statistical tools on the bottom that shows how strong or weak the dollar is versus all the rest, along with the daily, weekly, monthly trend, and our new dollar index, Japanese index, euro index, and so forth. I'm going to move some of these charts off the screen, and we'll focus on one or two at a time. But first, if you would like to load this sample workspace, you can easily add it to your charts by going to Chart Examples and then click on Forex Currency Indexes. And if you would like to add it to your existing workspace, uncheck Clear Current Workspaces and click Open. Alright, so let's move some of these out of the way, like the New Zealand, which probably most people don't trade, the CAD, Swiss, and what I will do is we will focus on the dollar, the yen, the euro, and maybe the pound. So when you bring this up, it sorts and filters the chart based on either the visible region or the last 2 days range. If you zoom out, you can see more distance. You can see a lot of information. Here's the dollar index. Here is Sunday night's high, Sunday night's low. You can see the dollar broke above the previous day's high, which is a very bullish thing to happen. This is the previous day's low. This is the hourly moving average, and the green one is the 15-minute moving average. If we zoom out a little bit more, you can see a white line or yellow line with gray above and below it. That is the dollar index's previous day's most actively traded price. So basically, one easy filter for using this index is above the previous day's point of control, which is the price most traders have positions. You want to look for buys. Above, especially above the hourly and the 15, look for buys, and breakouts above the previous day's high are very bullish. That happened at 3 a.m. If you bring up the euro dollar, you will see that it broke from above the previous day's low to below it right at 3 a.m. So as much of a no-brainer trade as you'll ever find in your life is when one currency does something on our index charts that is extremely bullish, like making a higher high today than it had the previous day, and another currency does something that's extremely bearish, in other words weak, by making a new low today. Now remember, this index is made up of all the euro pairs: euro dollar, yen, pound, Swiss, CAD, Australian, and New Zealand. So when this is making a lower low, more than likely the majority of them are going down. The dollar, the euro is going down against the majority of the pairs. So at 3 a.m., a smart trader would say, I'm going to sell this super weak euro against a super strong dollar, and we're going to bring up the chart, and I'm going to show, as much of a no-brainer type trade as you'll ever find. Look at this 3 a.m. trade right here. It broke below the previous swing low right here, and 36.20, and it's gone down 123 pips as of now. All right. Now, if you miss that trade, or you trade during the U.S. session, when the market reverses and comes up to a support, or in this case a resistance area like the 15-minute moving average, and can't get above it, it's a pretty high probability place to sell at 9 a.m. and 10 a.m. Now if you look at the dollar at 9 a.m., this one's just kind of going sideways. It's probably not the strongest of all the pairs. Maybe the yen is. Maybe we're better off selling the euro yen at 9 a.m. Yeah, at 9 a.m. This one had just broken out and made a higher high. It pulled back. It's right above its hourly and 15. The euro yen would be a better one to sell at 9 a.m. than the dollar, more likely. But even if you sold the euro dollar at 9 a.m., you can see 35.70, it went down 19 pips. So there's a good chance you made 5 to 19 pips on that. Let's take a look at the euro yen. 9 o'clock. Again, this one didn't really take off until a little bit later, but at 9 a.m. it's somewhere around 125.83, and it went down to 55. So it did move more pips than the other one. And at 10 o'clock, that trade was nice too. It went a little sideways, broke down. Basically, when you have one currency that's weak and another one that's strong, there's two main trades we look for. Rectangle pattern breakdowns, because anytime the market goes down to the low and goes sideways, isn't able to bounce at all, when it breaks down, there's no one buying here for the most part, or I should say there's no aggressive buying, or they would be paying higher and higher prices, pushing it higher. You know, there may be someone buying it around 126 to 125.80, but they're not aggressive. They have some orders there, not enough to push the price up, and when it breaks down, you know, anyone who bought there who's short-term trader is likely to get out, pushing it down. The second type of trade, once you find a currency trending, is a pullback trade, which some of the best ones on here are these three. You know, once the market makes new lows, sideways, rectangle pattern, breakdown, pullback, sell, pullback, sell, and this one, you know, was one of the better ones because it went from 36 very quickly down to 64. I mean, that's a huge 50+ pip move. And so that's how you use our tools. I mean, it's much clearer that the yen is much stronger than the dollar, and you can make these bigger, as big as you want to make them super clear. You can also, when a currency finds support at a moving average or the previous day's high or low or the point of control. The only downside of the yen index is that it's underneath Friday's point of control, which means Friday might have been a down day, and you know, so earlier in the day when this one broke down at 4 a.m., you might have wanted to buy the dollar yen because the dollar was strong at that point. So 4 a.m. dollar yen probably was a pretty decent buy. Here's 4 a.m. went from 90 up to 18. So that's a 28 pip move in the dollar yen, which basically illustrates how easy I think I've made trading. Traders are emailing me telling me that, you know, either they were doing well or not well before, but they are now. A lot of our traders we've had for years, and they've, you know, traded well for years, or they would have quit trading a long time ago. Some traders that are pretty much breaking water or losing a tiny amount but believe in themselves, haven't quit, have told me that this new index tool really, you know, makes trading a lot easier for them. So let's look at some of the other, you know, one more example here. This stuff's pretty easy. Here's the New Zealand dollar, and you can see it's above the previous day's point of control, major area of support. And earlier in the day, when it, you know, kind of found support at the previous day's low, had a false breakout, came back above the hourly, you could have either bought here or here, or bought when it broke out over these bars high at 5:30. Which one was weak at 5:30? Well, probably the euro was one of the weaker ones. So selling the euro New Zealand at 5:30 probably made sense. Here's 5:30. You have a little bit of a pullback, and guess what? It goes from 60, 63 down to pretty much the whole number. It's a 63 pip move in less than an hour. And so it doesn't matter which currency you're trading, and here's the pound, just to give another example. This one is obviously above the point of control. Actually, it's actually below the point of control because you can see the previous day's trading was a big down day. And then it went sideways up to low for pretty much 12+ hours and broke out. And so you can buy breakouts of trend lines, or you can just simply wait for a breakout above the previous day's high. 2 o'clock right here, the pound broke out. And remember, at 3 o'clock a.m., the euro broke down and became super weak. So somewhere between 2 and 3 o'clock, the euro pound would have been a phenomenal sell. And of course, as you can see, 2 o'clock, the pound got really strong, but it took it really an hour before this really took off. So you had a whole hour to watch this chart and wait for the breakdown, get short, and this fell 10, 20, 30, 40, 50, 60, 70, 80, 90, 100 pips. And I don't know if you haven't actually traded the euro pound, but it pretty much pays you almost 2 times the amount per pip as the euro dollar. So this is equivalent to a 200 pip move. Astronomical in one day.